welcome to Taking Stock. This is the show where we take stock of the week gone by and we prepare you for the next trading week. I'm Sonia, Shenoy, and with me as always is Anuj Singhal. What a bonanza it was for the bulls this week, and all of it of course on the last trading day. The good monsoon forecast, the retail inflation hitting a 6-month low, strong IIP data, and of course strong global cues was the recipe for a big up move on the index and a 500-point rally by the end of trade on the Sensex. Anuj, great tidings, good tidings for our markets, and it seems like it's here to stay.
Yeah, it looks like that, Sonia, because clearly the market negotiated the tough part, took support at that important zone of 7500, 7550, which told you that while on the way up that was a massive resistance. So it was good to see that, it was held as a big support on the way down, and from that point the market has rallied one way. In fact, this week the Nifty is up 4%, the mid-cap index is up only 2%. So this week the large caps just told the mid-caps who the boss really is, because the mid-cap outperformance was getting just a way too extended. Even if you look at the month-to-date performance, the mid-caps are still outperforming the large cap index. So that's where the mid-caps came back. My sense is some more catch-up for the mid-caps is left. The Nifty is at the 200-day moving average. If it crosses that, it will attract a lot of incremental buying, a lot of incremental short covering, and at this point in time we'll have to say that monsoon could well be the bit of a turning point for us. Now of course we head into earnings season. We'll start with Infosys of course on market holiday, but the sense you get is that the market has put a bit of a bottom and wants to move up now.
Oh yes, and there's definitely some institutional buying for sure, because on the last day of the week, the cash market volume spiked up to almost 20,000 crores versus an average of around 13,000 crores previously. So it just indicates that yes, there is a lot of interest back in the market. But joining us on the show today, we have Jyotivardhan Jaipuria, founder and MD of Veteran Investment Managers, and Ashwani Gujral to talk on the technicals as well. But Jyoti, let me start off with you. The last time when we spoke with you on this show, things were really different, and now look where we are. We've crossed the 25,000 mark on the Sensex again. Do you think the best is yet to come?
I think probably from now the market needs a bit of consolidation. We've had a very good rally in the market for the last 5 to 6 weeks. But one thing which I must caution is, though there have been a lot of India-specific factors which have turned positive, a lot of this rally is still a very global rally. So if you see global markets from the G20 summit in China, which was at the end of February, most global markets have had a rally, and I think the turning point there in the globe was really, since that day the dollar started depreciating, and which, like people say, probably there was a Shanghai Accord which has that fact. But whether there was a Shanghai Accord or not, it was a rally in the dollar which really helped commodities go up, which has helped the equity markets go up. And that is one overriding factor which probably adds to the positive we've seen on India.
Jyoti, hi, good to have you on the show. And skeptics would say that even the Wednesday rally, while it looked good, actually paled in comparison to the kind of big global rally that we had. And in fact, even week to date, the Indian market has underperformed the MSCI emerging market. But going forward, do you think our market will play more catch-up to the year to correct some of the year-to-date underperformance? We of course underperformed in February ahead of the budget fears. With that out of the way, do you think some more catching up is required for our markets?
Yeah, so I guess what we've seen, and the reason India has been underperforming, is we've seen like a massive risk-on rally. So if you see the emerging markets, the best performing market is Brazil, which is like, from year to date, if you take dollar terms, Brazil is up like over 30%. Since February end, Brazil is up 20% in dollar terms. So Brazil has been like one stark outperformer because the commodities have done very well, and that has been helping Brazil. I think in this sort of rally, India actually does not do as well as a lot of other emerging markets do, because India is like treated as a safe haven. But I would think over the course of the year, India would still be one of the better performing emerging markets, because I don't think this rally is like something which will continue and continue for a long time. In fact, my worry is that if this dollar strength now starts to taper off, because it is hurting Japan, it's hurting Euro, and I don't know what stand they'll take. Some of the central banks there may have to make some move to try and depreciate their currency, and that could see this rally coming a bit into question mark.
Okay, well let's talk about some big sectors that moved this week, Jyoti. One of them was autos. I'm going to name a couple of stocks for you and tell me where you see more value. Hero MotoCorp, which has hit a new high at 31.50. Tata Motors, which has rallied 15% in just 1 week. And then you have some of the smaller companies like TVS Motor that are sitting at new highs as well. Where do you see more potential now?
From me, it would be probably, like if you look at the next 6-9 months, I think I would be most bullish on the tractor people, followed by the two-wheelers and then the four-wheelers. So that would be my pecking order because, if we get a good monsoon, the tractors are the ones which are going to give you the biggest bang for buck because you'll have a huge swing coming there. In the four-wheelers, we've seen like a strong performance over the last 12-18 months in terms of volumes. So though volumes will still continue to be strong, the delta change is probably going to be the biggest in tractors, followed by the two-wheelers because, the rural story will play out.
Okay, Jyoti, the leader of the current market rally, this month's market rally has been ICICI Bank. Of course, from oversold ground, we have seen a big rally in some of these economy-facing banks, ICICI, Axis, even a couple of PSU banks. Do you think some more valuation play is left in some of these banks, even if the underlying problems are still intact?
Yeah, I think more valuation, probably what is helping them is, again, commodities. So if commodities start to do well, some of the problems which you see in, a lot of these banks, whether it's the private sector, the public sector would lend to corporates, will probably get sorted out. So we have seen, a commodity rally globally. We've also seen because of the minimum import price that steel sector in India is starting to do well. So that is one thing which is helping. The second is also, the risk on. As we get risk on, people are more willing to buy some of these. And some of these large private sector banks are the banks which, foreigners buy the most. So they are some of the most overowned companies for foreigners. So whenever foreigners start getting more bullish, these are the stocks which go up disproportionately. And the converse also happens when we see foreign selling, they fall, disproportionately also.
Okay, yes, that's true. You spoke about the tractor manufacturers and how you're bullish on them. The other pocket that has once again come back into the limelight is the cement space. So, names like ACC, Grasim, some of them sitting at new highs. Is there still a lot of potential here, or would you be concerned about subpar earnings keeping the stocks upside capped?
So, I think we'll see cement do well over a 2-year, 3-year frame. But I think we'll probably get better chances to buy it. The quarterly results are not going to be great, so probably some of these stocks will tend to slip. So these are things you'd want to buy when the stock prices come down rather than buy it at today's prices.
Okay, that's for cement. A big rally in some of the cement names. The underperforming sector has been, of course in the context, has been IT. X of Infosys. We haven't seen too much, by way of TCS or a couple of other stocks. What do you think is happening here? And incrementally, would you want to put some more money in IT?
So, if you just step back, actually IT is one of the best performing sectors year to date. Apart from, the best performing sector year to date is the metals, which of course is nobody owned and so it's done very well. So IT is probably one of the best performing sectors year to date. It is a play which, for people it has become, we buy IT when, nothing else really looks good. So IT and, even pharma and consumer probably will underperform most of these risk-on rallies because, it's become a very stable sector. Growth is going to be in the low double digits, but it's not a sector which is going to excite either way. You can't expect a 25% earning growth here. You probably look at, between 10 and 15% earning growth going forward. So it's underperforming more because, everything else is starting to look good. So people are willing to take more risk on the economy names. I would not be very positive on IT for this year because my view is that we'll get like domestic consumption, both rural and urban doing well. There'll be some pockets where investments will pick up also. So I would be, probably neutralish to slightly underweight IT.
Okay, neutral to underweight on the IT space. Before we let you go, Jyoti, one final word on the market itself. The top that we hit in January of 2015 was 9,000 on the Nifty. Now there are some hopes that at least we can make an attempt to get there. Do you get a sense that before the end of the year, we could be seeing those levels yet again?
I think like I look at fiscal year, so I think before the end of this fiscal year, we probably should be hitting those levels or coming close to it.
Okay, what about the domestic sentiment, Jyoti? We've seen that the domestic participation in this market has remained intact, barring that 2 or 3 month period when the market went through that massive correction. The domestic flows have supported the market throughout last year, and they continue. We haven't seen big outflows yet. Do you think they'll continue to support the market?
Yeah, I think, I'm quite positive on the domestic money coming into the equity markets because of two things. One is, as we get markets rallying, I think the mid-caps will do well, and that always supports domestic inflow. The second is we have to think of the alternate for a lot of domestic retail investors. So real estate used to be the biggest thing for them, followed by gold. And both of these asset classes are coming into question mark. Returns on them are slipping. And to that extent, equities are starting to look good. As interest rates come down, even, people may start thinking, okay, as a saver, I don't get too much money in fixed deposit. Let me move a bit to equities.
Okay, Jyoti, you have a good weekend. Thank you for joining us and giving us your view. So that's the word coming in from Veda Investments. But let's take a break. When we come back on the other side, we'll focus on the technicals of the market, which have been exceptionally good this week. But in the meantime, let's listen into some market opinion that we heard through the course of the week.
I think you have to remember that the Indian domestic story is what we should really be very concerned about. The broad economy, which was suffering for the last 2 years in the rural areas, as the monsoon has always proved that it will never fail in the third year, what we are expecting as valuations in this sector have kind of been destroyed because of the weak fundamental performance of all these companies. And we can't expect that this kind of underperformance will continue.
So it's conflicting signals on the FI front still. ETFs have been buying and they've been the contributory factor to the FI flow. But a lot of the conventional long-only funds which have been invested for a fair amount of time, particularly in high-quality names, have been selling consistently through this phase. And that's a trend that seems to be continuing. So it's a mixed trend amongst FIs. It's more ETF-driven flow. ETFs we find very difficult to predict, frankly, in terms of when they may turn and when not. So we'll have to see. I don't expect it to be a nice seamless flow right through the year.
I don't think so. We will see the lows tasted in the month of Feb in the foreseeable future, unless until monsoon fails. Of course, there are reasons which will probably pull back a market little because of the rally in the month of March. As long as the Fed rate hike is in line with the expectations of the market, we are unlikely to see a big difference. My feeling is that for us, the real issues on the global side will be what happens in China,